welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank by applying the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sarry Ibrahim. Thanks for checking out episode 121. In this episode, we'll talk about all of the services we provide to clients. I wanted to record this episode because a lot of times clients don't know about all the services and strategies we provide. Also, some of our close friends and families and potential referral partners, like attorneys and accountants, don't really know what we do either. So that's my fault. Our messaging needs to be more clear, and that's what this episode will hopefully accomplish. To start, many of you know that we help clients with the Bank on Yourself strategy, which is a strategy that uses cash value whole life insurance to become your own source of financing and to grow your wealth on a tax-favored basis, regardless of what happens in the economy. I've done a couple of episodes about this topic. You can go back to episode 168, 100, and 117 to learn more about some of the intricate parts of using the Bank on Yourself strategy. Now that you know what Bank on Yourself is, another important question one may have is, who is it a good fit for? I would say this is a good fit for anyone who wants to take more control over their financial life. Anyone who wants to be able to generate passive income and passive growth without having to get lucky or time the market. As you can tell, a good candidate for a Bank on Yourself policy is not really based off of income or net worth or investment experience. It's based off of a mindset shift, a shift in believing you could do more with your time and money by changing some of the tools in your toolbox. Another important consideration for Bank on Yourself is not just what it is or what the asset is called, rather what it does. This would be its function. And most importantly, what does it solve? Here are some of the things that Bank on Yourself can do. Number one, it provides a channel for you to become your own source of financing. This means rather than going to a bank or a lender, you'll be able to use your policy as a source of financing once you have accrued enough cash to do so. The key with using Bank on Yourself as a financing tool is you don't need to qualify for the loan. There are no credit checks. It doesn't show up on your credit report. Typically, you can't default on your loan. The interest rates are much lower compared to other banks and lenders, especially as of June 2024. You don't have to set a payback. You don't have to set a payback requirement. And most importantly, your funds keep growing even when you have an outstanding loan. The way that works is you're borrowing against an asset, and the asset's growth outpaces the cost of borrowing. So you're left with arbitrage. For example, let's say you have a real estate property that's worth $500,000. And let's say you don't have a mortgage on this, but you decide to take out a loan against this property. Let's say you take out a loan for $100,000 at 7% interest, and you paid it back in 1 year. Now, let's say that 1 year after the property increased in value by 3%, you paid $7,000 to borrow against the asset, but the asset increased in value by $15,000 in that 1 year. So the arbitrage in this example would be $8,000. So even though you borrowed, took on debt, and paid interest, you still came out ahead due to the rise in the fair market value of the property compared to what you paid to borrow against the property. Keep in mind, real estate doesn't always work this way, but the point of borrowing against an asset and the asset's growth outpacing the cost of borrowing does apply to Bank on Yourself. That's how Bank on Yourself works, but with whole life insurance. The second thing Bank on Yourself can do is it could be used as a source of retirement income. For example, similar to other retirement methods, you can pay into a policy and then the policy can pay you. I worked with this client who's funding a policy with $10,000 per year over the next 30 years until he reaches age 65. At age 65, based on current dividend rates, he'll be able to take out $35,000 per year for about 20 years tax-free. Keep in mind, these numbers may be different for you as the projections depend on your health rating as well as your age, since this involves life insurance. In this example, the client put in $300,000 over 30 years, and then we'll take out $700,000 over 20 years in retirement, completely tax-free. My question for you is, where else can the client do this? Yes, it's possible he can do this in the stock market if the stock market doesn't crash along the way. Yes, it's possible he can accomplish this with real estate if you consider an average of about $500 in net earnings per month per property. He would need about 6 properties to meet what this one policy will provide him in retirement. This isn't considering the time to find and manage 6 properties. Keep that in mind. The third thing a bank on yourself policy can do is help protect your assets from creditors. In many states, the cash and a life insurance policy is protected from creditors. I recommend you talk to an attorney about this. The fourth thing a bank on yourself policy can do is it gives you the ability to amplify your business and or your investments. For example, in the previous scenario with my client, I compared the retirement income from a bank on yourself policy to owning real estate, where one policy can provide income equal to about 6 properties, yielding $500 per month in net income. But what if you did both? You use your policies to buy real estate, then use the income from those properties to buy more bank on yourself policies, then use those bank on yourself policies to fund your retirement completely tax-free. There are many ways you can connect a bank on yourself policy with your investments to amplify them while also minimizing investment risk. Keep in mind, bank on yourself is not an either or asset. It's a both and asset, meaning you can use it for other assets as a way to enhance the growth. The fifth thing a bank on yourself policy can do, since we are talking about life insurance, you're using an asset that you can leave the next generation income tax-free. Your beneficiaries can receive the death benefit tax-free, use that lump sum to fund a new life insurance policy, with the beneficiary now being the insured, and now they can use this to finance their investments and then leave the death benefit to the next generation income tax-free, and the cycle continues. This is what the top 1% have been doing for the last 200 years. Now that we took a deeper dive into our company's main focus, which is bank on yourself, and what it can do for you, let's talk about our other services. Let's say you're in the process of closing on a commercial loan or an SBA loan, and the lender is requiring you to get life insurance equal to the total amount being financed. We can definitely help you with getting a life insurance policy for this purpose. There are important items to consider when getting a life insurance policy as a bank requirement. For one, the bank is never the beneficiary. Rather, the policy is assigned to the bank. For example, let's say the total amount you borrow from the bank is $1 million. So you get a 10-year term life insurance policy in the amount of $1 million. And let's say, as an example, you're halfway through the loan where you owe $500,000 and then you unexpectedly pass away. The death benefit would be assigned to the bank up to the outstanding balance of the loan, not the full $1 million. In this example, the bank would receive $500,000 to cover the remaining balance on the loan, and your beneficiary would receive the remaining amount, assuming the business will no longer exist and assuming there is no other collateral for the bank. We can also act as your financial coach and provide a second pair of eyes like an outsourced CFO. For example, let's say you come across a passive real estate investment and you would like to get a second opinion on the projected returns and how this fits into your financial picture. We can walk you through that investment and show you what to look out for. As an entrepreneur myself, I've learned it's important to have a coach/mentor, especially when it comes to making financial decisions. Oftentimes, entrepreneurs feel alone, and having someone they can trust who can help them look at their financial plan holistically can be a lifesaver. It has for me. The problem with getting financial coaching or advice is many times people go straight to their accountant. It's possible to have an incredible accountant who is super knowledgeable on taxes, but not be able to provide you with personal financial planning. Most accountants are not trained in personal financial planning. There is a clear distinction between getting advice when you file your taxes and getting advice when planning and making financial decisions. So make sure you go to the right person for personal financial planning advice. As a CFP professional, I have a fiduciary responsibility to make sure I'm always acting in your best interest, and I'm trained to provide advice pertaining to personal financial planning. You may be wondering, what's it like working with us? The process of working with us starts with an intro call. This is to see if we're a good fit and if we can add value to you and your business. After this, we'll set up a financial analysis meeting, which gives us an idea of your financial situation, your goals, and what you want to change or solve. The third meeting is the personalized solution meeting, which we typically meet on Zoom, and we go over your goals and your concerns and the strategy we have prepared for you and how this can help you reach your goals and or solve your problems. The fourth meeting is usually our implementation meeting, although this can also take place on the third meeting. This is where we begin the process of implementing the plan we are talking about. This may include submitting a life insurance application or connecting you with an attorney or an accountant to take care of a tax or legal issue or reaching out to a lender to begin the process for refinancing. The point is, we're taking action together and not just planning. Implementation is very important during financial planning because many times we have tons of ideas and we know the strategies are there, but unfortunately, most people never implement those ideas and plans because they get overwhelmed and don't know where to start. This is where we come in. We are your co-pilot. We help you connect all the dots in your financial life, and we help you solve all of your financial problems. To make it simple, here are all the services we provide to clients: bank on yourself, traditional life insurance, Medicare, health insurance for those under 65, financial coaching, long-term care insurance, disability, and annuities. I haven't really touched on Medicare and health insurance in any of our previous podcast episodes, but to give you an overview, if you just turned 65 or you received your 24th Social Security disability check, then you are now eligible for Medicare, which means you'll need additional Medicare insurance. Reach out to us if this applies to you, and we can walk you through the entire process from getting on Medicare to choosing the appropriate insurance to cover all the gaps. Lastly, annuities. Annuities can play a significant role in your financial picture. In short, annuities ensure the risk of outliving your money. With life expectancy increasing, people are outliving their original retirement plans, which can obviously be problematic considering the standard of living in today's world. Annuities can help you grow funds tax deferred and can help pay you monthly or annually for the rest of your life. Some annuities can pay out benefits tax-free if the annuity is in a Roth IRA. Other than for income, annuities can also be used as a way to build cash for the future if you don't need income now. Along with income protection, annuities can also help you sustain your wealth without having to worry about market risk. For example, if you just retired and you have a 401k and you like to use your 401k as an income stream alongside your other retirement sources, then you can roll over your 401k into an annuity tax-free, then take out income from the annuity for as long as you live, regardless of market conditions and regardless of how long you live. There's a lot we could do together, and we'd love to work with you to help you reach your next financial goals. Please reach out to us to schedule an intro call so we can learn more about you. Thanks for listening.
To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's F-I-N, assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.